Welcome back to Alpha Recap, your end-of-day market rundown from stockalpha.ai. We're coming to you after the close, and boy, the tape had some interesting shifts today. As always, if you have questions, you can reach us at stockalpha.ai.
Good evening. Today felt like a classic tech-led rally with a real sector rotation underneath it, not just the usual mega cap lift.
The headline numbers were tidy. The S&P 500 ETF finished the session up just under 1%. The Nasdaq 100 ETF surged about 1.33%, and the Russell 2000 ETF rallied about 1%. That tells you tech-led, but small caps did show up.
Exactly. It was a risk-on day. Tech and select cyclicals benefited, and breadth actually improved versus recent stretches where only the big names were carrying markets.
So, what really stands out here is Apple's headline. They announced an aggressive investment plan, $841 billion, and the market interpreted that as a long-duration CapEx signal.
Right, and the size matters. Investors saw that as a potential multi-year boost to semiconductors, photonics, industrial suppliers, and construction-related firms. It's the kind of corporate CapEx story that supports both hardware suppliers and service providers.
$841 billion. Big number, big headlines. I mean, when you step back and look at this, it's not just a one-off press release. It shifts expectations for supply chains and domestic build-outs.
Right. And the other thing is Oracle's earnings, they reinforced the enterprise AI adoption story. Management tone suggested customers are moving from pilots into deployments, which helped cloud and infrastructure names broadly. That's a key point. When enterprise software actually shows adoption translating into revenue, multiples get a lot more comfortable, at least until macro data steps in.
Another theme that came up was a so-called optical supercycle. Analysts and industry pieces pushed the idea that photonics and optical communications are entering a multi-year expansion, and that bled into materials and mining names.
Yes, think more fiber, more switches, more optical gear for hyperscalers and telcos. That lifts chip equipment makers, specialty materials, and miners exposed to copper and rare earths. The market rewarded that chain today.
Big move.
We also saw sector rotation. Communications and media names got a lift from streaming and ad revenue optimism, materials and mining rallied on the CapEx narrative, and data center real estate names were bid as well.
Right. The data center theme was interesting. Investors treated data center real estate as a real asset play with durable cash flows from hyperscalers. That helped the real estate group tied to cloud demand.
And utilities did catch a bid on clean build-out narratives. Grid upgrades and electrification projects tend to show up when infrastructure and CapEx talk heats up.
Which is kind of counterintuitive if you think risk-on usually means defensive sectors lag. But here, utilities that are linked to electrification actually benefited.
Financials were less impressive. Legal and policy headlines, plus a recalibration around credit given the CapEx focus, left pockets of weakness in banks and finance names.
Yeah, that tracks.
On crypto, there was renewed activity and investment that lifted exchanges and infrastructure proxies. That broadened the risk-on posture a bit. Not huge, but noticeable. Let's step into the big individual stories for a second. Apple's investment plan was the dominant corporate catalyst. It lifted suppliers across glass, semiconductors, logistics, and equipment chains because investors priced in domestic build-out and longer-term demand.
Oracle's results reinforced the enterprise AI narrative. Amazon's expansion in India also got some attention as a confirmation of international growth and cloud opportunity. That resonated across e-commerce and cloud segments.
Data center landlords and REITs saw stronger leasing expectations priced in. And separately, cannabis stocks reacted to policy chatter. If federal reform gains traction, those names could get a sustained re-rating.
Hold on, say that again. Cannabis?
Yes. Renewed policy talk around reform prompted flows in the cannabis names. It was idiosyncratic, but it contributed to the day's broader risk-on tone.
Interesting. I mean, when you step back and look at this, you see corporate headlines, earnings, and niche policy stories all converging to lift risk assets.
Exactly. But beneath that enthusiasm, the macro picture, especially inflation and Fed implications, remains the anchor. Today's rally wasn't a rejection of the Fed. Participants treated the headlines as growth supporting, without immediate inflation alarm bells.
Right. Upcoming CPI and PPI readings and Fed speakers this week are still going to move markets. If inflation reaccelerates, that would narrow risk appetite quickly.
On the flip side, if inflation cools and growth looks durable, the market is set up to keep rewarding growth and AI-exposed names. So it's a data-dependent rally.
Quick technical check. QQQ outperformed. IWM participation showed better breadth, and the S&P 500 ETF cleared a near-term resistance level. That looked like a clean breakout, provided volume and follow-through show up tomorrow.
Yes, traders will watch whether the S&P close above resistance holds, whether QQQ leadership broadens inside tech to semiconductors and infrastructure, and whether IWM can build on today's roughly 1% gain.
So, what really stands out here is the mix. Big corporate CapEx headlines plus earnings validating AI. Together, those two things make today more than a simple momentum bounce.
And to add to that, if CapEx is productivity enhancing rather than inflationary, the Fed has more room to maintain its current stance. But if CapEx fuels wages or goods price pressures, policymakers will be watching closely.
Honestly, I was a bit surprised by how many sectors participated today. Communications, materials, data centers, utilities. That's a broader roster than we often get in a tech day.
Me too. It suggests the market is trying to price a multi-dimensional story. AI adoption, semiconductor investment cycles, optical demand, and corporate onshoring all in one package.
Short reactions.
Right. Big move.
Okay, quick takeaways before we sign off. 1. The market closed up with tech leadership and improving breadth. 2. Apple's $841 billion plan and Oracle's AI-confirming earnings were the day's core catalysts. And 3. Macro data and Fed commentary remain the ultimate arbiter of whether this becomes a durable rally.
Also watch sector flows. Will money stay in communications, materials, and data centers, or rotate back? And keep an eye on upcoming CPI, PPI, and Fed speakers for any inflation surprises.
If you want the short version, constructive session, tech-led, better breadth, and data is still king.
Exactly. That's the bottom line.
Thanks for tuning in to Alpha Recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Good night.